Hey everybody, it is Melanie Calmer and Jesse Valadares, and we are Team Bona Fide at Berkshire Hathaway Home Services, Laffey International Realty.
What's up, everyone?
And we are on everything Long Island. We're filming out of our Woodbury office, and today we have Eric Schachter, who is a mortgage banker at Luminate Bank.
That's right.
Thank you. Good to be here, guys.
Thank you so much for coming.
Feels so nice, like we're at home. I love
Totally.
it. Just bullshitting.
Yeah, it's so much fun.
We're so happy to have you here.
We are.
Especially now the market's really crazy. With everything that's going on, I think this was the right time to have you on. I think people really want to know what's going on with the interest rates. Are they going to drop again? And financing as a whole, I think everyone's a little concerned.
Yeah.
It looked like rates were dropping for a while.
I think people are comfortable with rates in the sixes, high fives. They'd be okay with that. But it's the volatility. It's like the not knowing what next week brings. Do I go into contract now? Am I going to be hit with a higher rate? Mm-hmm. And it really all ties to things that we can't control. The Middle East and oil. When oil is up, mortgage rates are up.
Right.
And, that is not coming down anytime soon now.
So where are rates right now?
I would say 6%, 6.125 they've gotten into. That's a 30-year fix with no points, but I also push the 7-year arm. Yeah. Fix for 7 years, and it's closer to 5.5%.
Oh, neat. Okay.
So take advantage of a half a point in rate. Especially on real estate here, almost $1 million, that's sizable, a half a point.
Yeah. It really is.
And there'll be an opportunity to refinance down the road.
Or maybe in 7 years you decide to take a step up and buy a different property.
100%. Also, you have the clients looking to buy property and they're putting down a lot of money. They could maybe use an interest-only loan. Sure. So it's 7 years interest only, and it keeps the payment very, very low because you're paying interest only.
Right.
Yeah. Have the opportunity at any time to knock it down and pay more towards the principal balance. So if in a year you make extra IRS refund or whatever, you want to knock it down by 100 grand, the payment will automatically recalculate.
Love that.
Based on whatever the outstanding balance is.
So I got a question for you. Do we still have these down payment assistance programs here in New York, or is that?
We do, but they just become a little bit more stringent. They're totally available. Okay. I think there's a lot of lenders that are now pricing into their rates that they're offering for the first-time home buyer, for the clients that don't make a certain amount of income, household income. Oh. So you don't need to go in one direction like Sony May, which is a good avenue, which is a state of New York program, but you could also go the other traditional way and still get discounts.
Okay,
that's interesting.
That's really good.
So I have a question. I met these two girls. I went shopping and gave my business card, of course, and they said, oh, well, we're not ready to buy for like a year. And I said, that's very interesting. And of course, I gave them your name. And I said, you may want to fix your credit because your credit has so much to do with your rate.
You nailed it. That's exactly where I love those clients. I love to start early. It's like, let's get it all set up appropriately. Right. Also, one of the topics I was going to talk about is our Homebuyers Edge program, which allows us to submit it to underwriting ahead of time. Okay, a to-be-determined property in Woodbury, New York, and it goes into underwriting and it gets fully vetted. And then that credit approval is a lot better than my pre-approval. Though I've been doing this 25 years and I know my pre-approval is very valid, I'd rather go to an underwriter, fully vetted out, all at no cost to the client.
Wow.
So now that they could go
they're
shopping,
as good as cash.
And they're as good as cash. Yeah, and there's no stress for them. If it's October, if it's a month from now, we're prepared.
What if they're borrowing over 20%? Can they still qualify?
They can still qualify, yes, for sure. And no matter the amount of down payment.
Interesting.
Conventionally, I would say 5% is the comfort level. You could do as little as 3% on the conventional loan. FHA is 3.5%.
Right.
We talked earlier about VA. VA allows for 100% financing.
Correct. Yes.
So
except that's a little more strict with the condition of the property.
Oh, yeah.
But if you're a seller and you hear, they're doing 100% VA financing, you might be nervous. But if it's already been fully vetted out by underwriting and all you are going to need, pay stubs, a recent bank statement, and it's been vetted out, then it's not as concerning
that's a big
to you.
advantage, especially now in our market that's still a very, very low, tight inventory market, and buyers are still competing.
Right.
This gives them a leg up when the seller knows, hey, they're good to go. Like, this has actually been vetted. The other thing is, don't you have a program where you can almost waive the appraisal contingency?
I was just going there, so that's exactly it. So I could take that exact client, they've been fully vetted out, and now they go see a property that you guys take them to.
That's amazing.
I run it through my desktop valuation called an AVM. An AVM will show me what the median value is and what I could guarantee 5% above that value to guarantee that they can waive the appraisal contingency.
Yeah,
so an example, it's a $500,000 listing. I run it, my AVM comes in at 500. I would go up to 525 to guarantee for the purposes of financing that they would not have to worry about an appraisal and they could go waive that appraisal contingency.
So can I just now talk to everyone that's watching this right now? I want you to know that just because you see someone and they say that they can give you a pre-approval doesn't mean that they have a good head on their shoulders, that they've qualified you properly, that they know the business, and that you're going to get to the closing table. You really need someone that knows their stuff, and Eric does. So whether you use us to buy or sell, that's a whole other story. But please, do yourself a favor and call Eric. And I don't get anything from Eric if Eric closes with you, except for peace of mind, knowing that someone didn't lose their shirt, they got the house that they wanted, and they were just taken care of right. So
I really
have
appreciate
to
that.
just say
Thank
that.
you so
Well,
much.
you definitely need proper representation
It's
all
just
around,
awful.
whether it's for financing or helping you buy or sell your
Attorney.
property. But going back to that, I mean, that's really a great program because that really gives you an edge.
But
as a
that's my
buyer.
point. You're
That's
not going to hear
amazing.
that from
What's
every
even
person.
better that I love, it goes back to the same underwriter who underwrote that initially. So it's not like it's a whole brand new loan to they
that
already
it goes
know
to a different
you.
card.
Right.
It's this person's desk.
There's not going to be a new surprise that
I love
comes
it.
up.
I
It's
love
already been vetted out, So I think that to me gives that borrower that's not ready now the comfort, the knowledge, the preparation. We've gone through all the steps.
And you know what I wanted to talk about, and this is a deal you actually helped us with recently. We had a difficult buyer, and you were able to work out two different loans, but one of them was a traditional loan. Can you talk a little? I mean, a non-traditional. I'm
Right.
so sorry, non-traditional loan.
So
Can
there's
we
a
talk-
sector in the mortgage world that's about 20% of all business that's being done is under this non-qualified mortgage. Other words, been called non-QM. And in the non-qualified mortgage, they're not focused on your tax returns. They're not focused on the normal traditional financing. And they're broken down into two major sectors. One, on a primary residence, you could do a bank statement loan, you could do a profit and loss loan. On an investment property, not even caring about your income, solely caring about the rent roll. And it's called a DSCR, debt service coverage ratio. Right. So what can I get in rent versus what my monthly obligation will be? And that's where you have to be positive cash flow.
Right.
So another great tool.
That's really good. So that helps investors, and the bank statement loan really helps people like self-employed individuals. They have a
Exactly
small
right.
business, and maybe you don't get a lot of W-2 income or whatever it may be.
Or their accountant writes off such a big chunk on their tax return,
Right.
and we see this all the time. They're showing that they only make 20 grand for the year,
Yeah.
but then you get bank statements, and there's $10,000 a month in deposits.
Right.
We're able to use that to qualify.
That's great.
And one of the biggest myths, which about 2 years ago when this first started being a really big player, the spread between these two regular programs and the non-traditional was 2 percentage points. So you're being offered 8 or 9% when the traditional rate is 5 or 6%. Now the spread is so tight that the rates are nearly comparable.
Wow.
And it's why wouldn't you take the easier path that you could qualify for?
Right.
So with our client that we closed recently that you were talking about, we had it set up in two different ways to go forward, which was unique, saying that we'll go off of 12 months of bank statements. waiting to see if he files his tax returns. And if the tax returns were enough income, we're going to go that route.
Right.
And we did that, and we pivoted like professionals as a team, and we were able to get the borrower the best loan possible.
How much money did he save?
Life of the loan, probably 50 grand, you know?
Yeah.
That's a lot of money.
That's a lot of money.
That's a lot
you know?
of money. Nothing to sneeze
It
at.
was good because we were protecting. Eric was protecting the buyer. At the same time, it was protecting the seller because the seller knew either way there's an approved loan.
That's right.
So,
That's right.
And again, it starts with communication, having the right teammates, and just like you said, whether it's a buyer that's alone that needs great representation on the realtor side, there's nobody better than these two.
Oh,
thank it's
you so
really
much.
just so refreshing to. I get excited when you guys call.
Thank you.
When you say, "Could you come to an open house? Could you do this podcast?" Like I love it. I love being a part of this.
Yeah.
Such a good vibe and just
Thank
good
you.
meaning behind everything you do,
Thank
and
you
it's
so
well
much.
thought out, and it's just really enjoyable.
we
to work
love
with
working
you guys.
with you, and you're just an
do.
incredible human being. To begin
Totally,
with.
all the way
Right
around.
back at you.
Now I know just having you is a privilege and your time is limited, but I had two quick questions.
Yeah.
One is I understand there's some changes in the condo market right now when it comes to lending. Can
For
you
sure.
speak on that a little bit?
Yeah, and it's not going to get out quick enough, and that's, I think, a concern for me, that the more people that know, the more building managers, the more attorneys, real estate attorneys are looking at documents up front to say to their clients, you should go ahead and buy this condo, it's acceptable. And one of the real batches of documents are the financial and the budget.
Right.
They get the questionnaire, they review all of these documents, and they say, buyer, I give you the green light. Well, starting in August, there's two major changes. One is that the amount of documentation that needs to be reviewed is now a much greater amount of documentation. There used to be a path of least resistance, we'll call it, called a limited project review. Just like it sounds, limited documents. We didn't need to care about certain things, the biggest being the budget. Now it's always has to be done as a full review.
Right. So there's more documentation, so it'll take longer to.
And in that process, they're going to uncover the budget. They have to review the budget in this process, and that change
Wow.
where there's a line item in the budget that says reserves. How much is the
Right.
building budgeting for reserves if they need to do work to the property? Fannie Mae always said that number has to be 10%. You want to make sure you have at least 10% in reserve, and a reserve line has to be very clear that there's 10%.
The HOA has that reserve.
Correct. Now they just increased it from 10 to 15%.
So where are they going to get that 5%, that additional 5% from?
And again, that could be,
Well, they have to manage their budget.
they have to, exactly right. And this budget is a piece of paper. It's an audited financial that does need to be up to speed with this guideline change.
Wow.
How they, again, I'm not going to say manipulate, but how they make their bottom line numbers make sure that it meets Fannie Mae's guideline. I'm sure there's creative
Well, that's
ways.
a big deal because in the interim that this is happening, it could cause a lot of issues in the first several loans that fall within, this period.
100%.
Trying to readopt all this
And we know that contracts don't get signed overnight.
Yeah.
No.
If deals are happening in July and early August, and then this is going into play,
Oh, gosh.
and now you haven't had fully executed contracts. You review, the lender reviews the building and says you only have 10% in reserves allocated. Oh, now we have to work on getting an updated budget.
Wow.
So
It could push off a closing.
Yeah.
It could make
Oh, yeah.
someone lose
Yep.
a buyer.
and it could make
or
a buyer
seller.
back out. Exactly right. And
Unbelievable.
one thing that I don't know how it's going to play out, but the
Wow.
co-ops haven't followed this same guidance. So I don't know, will a co-op all of a sudden become more attractive if the condos are now having certain issues with lending?
Wow.
Again,
Isn't that crazy?
Well,
to
at
determine.
least the fact that we know this now, we're aware. So guys, if you're going to be selling your place or buying, a condo, or starting around August, at least now you're aware that, hey, there's going to be, more vetting and other requirements that aren't there now. Just be aware of that. The other question I had for you is, has there been a change in the jumbo market and the jumbo loans?
It's a great question.
Luxury
I think a lot of investors are still opening up where you're going to non-Fannie Mae, and it doesn't matter. So what I mean by that is a Citizens Bank, as an example, I'll give them a shout out, Four Leaf, a credit union that we deal with, not really concerned about these thresholds, okay?
Okay.
In terms of loan limits. As far as the jumbo limit in our counties is $832,500. So I do like to throw that out to my clients to make them aware, if you're going to take a mortgage for over this amount, we could have to go to a route that requires more documentation,
Right.
and a debt versus income ratio more stringent. And as far as rates, still comparable, but that's something that we just have to talk about. So 832.
832, that's a high number. It used to be what, like
417.
Yeah, I remember those days.
Yeah.
So it's pretty interesting. I don't know, don't call me, I know we're being videoed here, but like roughly from 2000, 2002 to 2018, it was 417.
Then they raised it to
Then they raised it, and
something.
every year they raised it roughly 50, 60,000. And it just went up to last year to 832,500.
That's incredible.
Yeah. So
That's a big deal.
again, constant changes. The only other topic that I wanted to quickly talk about was accessory dwelling units. ADUs, they're called in the mortgage space especially, and ADUs are becoming more and more popular. People are
Yes.
not wanting to sell. They'll build something in their backyard to rent, to make additional income. One of the transactions we closed also recently had an ADU in the back, and that monthly rental of about $2,500 is going into the calculation to help the borrower qualify.
Isn't that
deal.
wild?
So it's something to also just think about, understanding properties, how they're zoned. We had to deal with zoning and understanding, is everything legal, and is there a CO, and, understanding all of those things. So again, I can't say it enough to that first-time home buyer or that young couple or whatever, even a seasoned vet, they need a good team behind them.
Absolutely.
They need the security of having the mortgage, the realtor, the lawyer, all good spheres of influence. And
I just have one question to ask. What is the difference, for the people that don't know, between a mortgage banker and a mortgage broker? Can you tell me the difference?
that's great. I usually like to say there's three different troughs. You have the banker. The banker works at Chase and offers Chase's programs.
Yes.
Very straightforward. You have the broker. They don't do the underwriting. They're not doing the in-house work. They're sending it to one of these investors, brokering it, uploading it to an investor like a Chase or a JP Morgan Chase, and sending it to them. And then there's me, a mortgage banker. Acting as an independent mortgage banker is really the term. An IMB, independent mortgage banker, has the flexibility of underwriting and doing all the work, closing the loan in Luminate Bank's name, and then selling it in the secondary market to one of these different institutions. So I would say when I price the average loan, a generic loan, I'm looking at about 30 different banks.
Wow, that's so much more than the layperson gets to.
Right. So again,
see.
the Chase situation, you're going in, you're only learning what Chase has, what their rate is, what their program is, and you're losing out there. Yeah, I'm sorry, I'm picking on Chase, but that's how the bank is set up. And when it comes to co-op and condo lending, like we just spoke about, a bank might have an issue with that building, and then that's the end of it, and the deal's dead.
Yeah.
While as an independent mortgage banker, I have plenty of other options where it could be for a non-warrantable, meaning that it doesn't meet all those perfect characteristics.
You can
I have the other
underwrite from all
avenue.
the different banks and
Exactly right.
institutions.
See, it's so interesting, everybody, because these are the little things that are so big. You don't really realize what the difference in a title is, but it's so broad in scope of how little you can have to look at of programs to how broad. So thank you so much. Thanks for coming,
thank
Eric.
you so
We love
much.
you.
This was so
We didn't get
nice.
enough time today,
Yeah,
so
I'd like
you
to be
definitely
back
have to
if
come back.
Okay, good. Please.
Absolutely, anytime.
Okay.
We love
update
you.
Yeah, we'll update you on market conditions in a month from now and
Yeah, that
what's
would be
going
great.
on new updates
And come back after the change in August. I want to hear how the shit hitteth the fan, because it's going to. I'm sure you're going to have some stories.
Conversations like this will keep on protecting people. So again,
Yes, please.
thank you so much. This was awesome.
Thank you.
enjoyed
So
myself.
everybody, Eric Schachter, Luminate Bank. So see you soon.
Thanks, guys.
Bye, guys.
Pleasure.
Take care.
Bye.